Welcome to The Explainer. Today, we're going to get into something that affects almost all of us, tax withholding. We're going to break down how it actually works, why your paycheck can feel a little lighter than you expect, and, most importantly, how you can actually get some control over it.
You know that feeling, right? We've all been there. You get a job, you see that salary number, you do some quick math in your head, and then that first pay stub hits and you're just staring at it thinking, wait a second, this isn't right. Where did the rest of it go?
And this right here is exactly why. You've got your gross pay on one side, that's the total amount you earned, the big happy number. But then on the other side, you've got your net pay, your take-home pay, which, yeah, it can be a lot smaller. That gap is the great paycheck puzzle, and we're going to solve it together today.
Okay, so the biggest reason for that gap is something called tax withholding. And honestly, the best way to think about it is this. It's basically the government's educated guess about how much tax you're going to owe for the whole year, and they take it out bit by bit from every single paycheck.
So, let's get official for a second. Tax withholding is a pay-as-you-go system. It just means that your employer deducts money for your taxes, federal, state, you name it, and sends it straight to the government for you.
And why do they do it this way? Well, the IRS puts it pretty plainly right here. The whole idea is to have you pay your taxes as you go throughout the year. It's really to save you from getting hit with one gigantic, terrifying tax bill in April that you might not be able to pay all at once.
You know, here's a really good way to picture it. Every single paycheck, you're just making a small down payment on your total tax bill for the year. It's not some random fee. It's your money being put aside for a bill you're gonna have to pay anyway.
Okay, so if it's just a down payment system, why is the guess so often wrong? I mean, why do some of us get these huge refunds, which is basically just you giving the government an interest-free loan, while other people get a nasty surprise and find out they owe even more money in April?
Well, here's the absolute heart of the issue. Your employer is guessing, but they're guessing with only a fraction of the information. They only know what you make at that one job. They have no clue if you have a side hustle, if your spouse works, if you're making money from investments. They don't know if you qualify for big tax credits, or if you just got married or had a baby. They're only seeing a tiny piece of your entire financial world.
So this brings us to the single most powerful tool you have to fix this guess and make it way, way more accurate. And I'm talking, of course, about the Form W-4.
Seriously, don't just see the W-4 as another boring piece of paper you fill out when you start a job. It's not. It is literally the instruction manual that you give to your employer. You're telling their payroll system exactly how to adjust that guess so it's right for your life, not somebody else's. And the form has these different sections that are like your control panel. Step 1 is the basics, your filing status. But the real magic happens after that. Step 2 is where you tell it about other jobs. Step 3 is huge. That's where you claim your kids and other credits. And Step 4 is for fine-tuning everything else. Every single step you fill out makes that guess better and better. All right, let's get practical. Let's see how this all shakes out on an actual pay stub. We're going to use a really simple example to see exactly where every single dollar is going. Okay, let's start with a nice, clean number. Imagine for this pay period, your gross income, the starting line before anything gets taken out, is $200. Okay, now for the deductions. First up, you see the federal and state income tax. That amount is coming directly from the instructions on your W-4. Then you've got FICA taxes. That's money for Social Security and for Medicare. Altogether, in this example, those deductions add up to $24.67. So here it is, the bottom line. You take that $200 in gross pay, you subtract the $24.67 in deductions, and you're left with a net income, your take-home pay, of $175.33. That's the cash that actually hits your bank account. So the big question is, how do you make sure you're having the right amount taken out, so you don't owe a ton of money later or give away too much up front? Well, the IRS actually has a name for this. They call it a paycheck checkup. And this is so important. Your W-4 is not a set it and forget it kind of thing. You really should do a checkup whenever your life changes in a big way. You get married, you have a baby, you or your spouse gets a new job, you start earning a lot of money from a side business. All of these things change your tax situation, so your withholding needs to change right along with it.
And the absolute best tool for doing this checkup is right on the IRS website. It's called the Tax Withholding Estimator. You just plug in your info, and it'll tell you if you're on the right track or if you need to give your employer a new W-4 to adjust things. It's incredibly helpful.
At the end of the day, it's all about being proactive. Taking just a few minutes to do a paycheck checkup and update that W-4 can literally be the difference between a massive tax bill in April and a smooth, stress-free tax season. It's how you take control.
So I'll leave you with this final thought. Think about your life right now. What's one small tweak you can make to your W-4 today that would get you withholding just a little bit closer to perfect? A little effort now can save you a huge headache later. Hey, if this explainer helped you out, make sure to subscribe to our channel for more videos like this. Thanks for watching.